Okay, in this video, we're going to be going over some risk factors associated with futures or leverage trading. Now, right at the beginning, I'm going to say that anybody who's trying to attempt leverage trading or futures trading, you should have a very good spot trading record before you attempt this. The gains can be a lot bigger, but so can the losses. Okay, so first thing we're going to look at is the leverage trading risk over here on this side. If you want to attempt leverage, you have to understand what your liquidation levels would be according to how much leverage you are using in that trade. So these are low risk leverage trading amounts, and that's 1x up to 5x. And then you start getting into the very high risk leverage trading when you're using more than 10x up to as high as 100x. For 1x leverage, that means you're not using any leverage at all. It's a 1-to-1 ratio. If you put up $1,000 in the trade, that means you're only using $1,000 in that trade and you're not borrowing anything to add extra capital to that trade. 2x leverage is a 50% move to liquidation. So that means if the price moves 50% in the opposite direction of the direction you are trading, you will get liquidated for that trade. Now, liquidation means that you forfeit your entire position and capital for that trade. If you're using 3x leverage, you're allowed a 33% move until you're liquidated. If you're using 4x, it's 25%. If you're using 5x, it's 20%. And then in the high risk, if you're using 10x, it's 10%. 20x is only 5. 25x only allows a 4% move. If you're using 50 or 100, that goes down to 2 and then less than 1%. That means your entries for these high leverage trades must be pretty much perfect. Otherwise, you're risking liquidation for that trade. Now, the next factor you need to look at, this is called the maintenance margin rates. So if you go over here to this button in the futures platform, this is for KuCoin, so it might be a little different on other platforms, but this little button in the top right-hand corner looks like this over here. This little button will be at the top right-hand side of your leverage futures trading platform. So once you've clicked that button, this little menu will pop up and it will show you the current maintenance margin rate for that coin. So this is for Ocean, and all the coins are going to be a little different, right? So for Ocean, it's an additional 2.5% that you're allowed to have on that trade. So once you've clicked on this button, this little menu will pop up. And what you want to focus on here is the maintenance margin rate. Now this 2.5% is an additional risk factor you must consider when you're entering into these trades. This number will be different for all the different coins. This is just the example for Ocean right here. So a 5x leverage trade has a 20% liquidation rate. So that means if the price moves more than 20% in the opposite direction of your trade, you would get liquidated. If you include the maintenance margin rate, that means it's 20% minus 2.5%. So that gives you a 17.5% move to the opposite direction before you get liquidated. This will increase the risk factor and only allow a 17.5% move to liquidation if you're using 5x leverage. Next thing you need to know about is the funding rate. So if the funding is negative, that means there's more shorts than longs. So the shorts will pay fees to the longs. Funding is positive equals there's more longs than shorts, meaning that the longs will pay fees to the shorts. Every coin has a different funding rate and hour when funding rate resets. So for Ocean here, you can see at the bottom it has this projected funding rate at 0.01% and it's a plus. So it's green, meaning it's positive. So if you were to open a long position, when this is open, that means that the longs will be paying into the shorts if the price goes down. And if the price starts going up, then the shorts will pay fees into the longs. This essentially means that you could be getting paid to be in a trade even if the price isn't moving a whole lot. So you could actually benefit from this if you're opening your positions at the right time. Once you've opened the futures trading platform on KuCoin, if that's what you're using, you'll see these are all the normal things that you would use for entering your trades, right? You have your limit orders, you have market orders, limit stop, and I think if you click this drop down menu, it'll have market sell and market buy orders as well. So here you would put the price of the asset that you're buying, just like normal, the amount of the asset that you want to buy, and then this bar down below that shows percentage, this is the amount of your futures wallet that you'll be using in that trade. So you can have these automated preset settings. You can click on 25%, 50%, 75%, or 100%. And this number here will relate back to how much of your USDT total assets, your available balance here, that will be used in that trade. Then right below this, it'll allow you to choose the amount of leverage that you want to use in that trade. So again, you must consider all of these factors before you click that button. You want to make sure that your risk is comparable to the trade that you're trying to open. So over here, you would select either 1x up to as high as 20x for Ocean. Ocean allows a risk limit or a limit for your buy as high as $70,000. That means you can borrow up to $70,000 worth with the amount of leverage that you're using. Now there's another very important button that you need to be aware of here is the reduce only button. So if you were in a long position on Ocean, for example, and you wanted to exit this trade, and you put in your price for the limit to sell at and the amount that you choose to sell, in order for this to activate properly, you need to click this reduce only button, and this will close your current position. If you don't click this button, it may open another long or a short depending on which way you're going. So if you're trying to exit a trade, you have to click this reduce only button to safely exit. This will prevent you from opening up another trade with another amount of leverage, and it might be a little confusing. So you have to make sure you click this button, reduce only, when you're trying to exit your trade and close your position. Now there's more options here as well. You can set a take profit and a stop loss for your long if you click on this little button here. And then you can set a take profit and a stop loss for your short if you click on this little button here. It'll be a little check mark box that you can select for one or the other. This will allow you to set a take profit if the price goes up, and it'll also have a stop loss set in the same order. So once you've clicked on these buttons, it'll bring up another drop-down menu where you can enter all the numbers you need for that trade to be executed. Now keep in mind too that the stop loss for this trade is a market sell order. So if you're using a large amount of money in this trade, that could be pretty painful if you take that stop loss hit with a market sell or a market buy, depending if you're longing or shorting for that trade. So just keep that in mind. So for an example here, if you were to enter into CRV, say you were trying to enter into this support region, here you have a low, then a lower low. Maybe you're trying to buy into this higher low, okay? So the 7% move here is if the price came down below the support, potentially you could have had your stop loss for this trade down below the support level. So that's a 7% move to the downside. If you're using 5x leverage, that would add up to a 35% loss. It also means that the max leverage for this trade safely would have been about 13 to 14x leverage before you get liquidated. Okay, for this example, we're using Bitcoin. Now, for example, if you were trying to enter on this support level, okay, and you tried to get an order filled in this area, if you were using 50x leverage, which is really high leverage, that means your entry would have had to have been nearly perfect in this area, and your stop loss would have been below this support. If your leverage was as high as 50x, you're only allowed a 2% move before you get liquidated. So this little bit of a dip is all it would take to liquidate your entire position. Keep this in mind when you're opening leverage trades. It's really easy to get liquidated if you're not managing your risk properly. You can take big losses, but you can also make really big gains. Practice with tiny amounts. If you can't double $100, you have no reason to be using any more than that. Leverage trading requires excellent spot trading experience with near perfect entries and risk management.